Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we're taking a look at Atkore Incorporated, ticker ATKR. This is obviously, to me, a turnaround play, kind of one of those stocks that are more what I like. As you can see, we have green across the board, super sound fundamentally, but analysts are projecting a decline in revenues, and due to that, they're underperforming the market, and the price is, well, paying the price for that. So as we get into this one, we see the fair value is around 105, discounted cash flow is 105, currently trading for 86.5. It's been as high as 194, or it's been as high as 195 in the last 52 weeks, as low as 76. Is that true? All right. Earnings yield is almost double digit, 4.33. It's currently trading for a 9.8 PE ratio, so that's really good. That's nice and low. Price earnings growth, not so good. They are expecting declines in their revenue and therefore earnings, so we're actually coming up with a negative PEG. We like to see that under 1, but not under 0. Cash flow yield, 12.5, nice double-digit number. On average, 15.8, and I do believe that is something that's been on the decline. Yeah, they peaked in 2022 and have been coming down since. And that's the story for a lot of things with this company. We can take a quick look at the price charts and see how everything's playing out over here. They didn't start issuing a dividend until this year is their first year with a dividend, so that's not necessarily important. Their earnings are on the decline at the moment, but pretty flat in general. Not like what we see with a lot of companies. The cash flows way up above everything else. Super strong cash flow company. Really good margins. They're one of those mid-cap, consistent, high-margin businesses. Some of those companies that you look for to build a strong foundation for your portfolio. Not when they're on the decline, though. And then we have the balance sheet. The balance sheet just continues to improve year after year. And the fair value, along with everything else, peaked in 2021 and is on the decline. Right now, it's sitting just above the share price, which is somewhere where it doesn't really tend to be. Back in 2021, it was there. And then the share price was above for 2022 and 2023. So we're not looking at a stock that generally underperforms its fair value. It's definitely been above, and in recent times too. Dividend yield 1.5. As I said, they just started that this year. Payout ratio 14.5%. That's pretty low. They can definitely do more, but they just started that dividend, and they're not necessarily a dividend company. ROE, ROI, and ROA all look great. 30, 24, 15.5. Debt to equity looks good. It's under 1, so that ROE isn't super inflated. They have really good returns. Margins look strong, 33%, or 33.5 this year, typically around 38. We like to see them above 30. Margins, we like to see above 10. Usually 19. This year they came in at 14.6. So they clearly had a really rough 2024. And analysts are projecting that that is going to continue for the next 2 years. The question is, do you agree or disagree with those analysts? If you agree with them, negative 2% revenue growth, not unreasonable. Share count, they buy back shares like crazy. We can make this -6 instead of -7, buying back 6% of outstanding shares. Cash flows, if the revenues are going down, we'd expect those to go down as well. Maybe not to the same degree if they're able to get the operations to run better. Assets, slowing down on growth, but still pretty strong. 11%, 5%. We'll go with 4 there. Liabilities are consistently around 3. Dividend, I don't know what they're going to raise it, if they raise it at all, or if this is a special thing. We'll have to see about that. And margins, I'd like to see them get those back up to what we've seen previously, but I wouldn't necessarily bank on it. Those are still decent margins that we're seeing. So with this for our thesis, we're coming up with annual growth of about 5.3%. Once you factor in the dividend, we're talking 6.8%. So on the lower end of what you would expect from market returns is what you're looking at here, mostly driven by the share buybacks. A combination of share buybacks and the dividend growing could be really good for investors. But again, we'll have to see how that plays out. They're good at giving value back to their shareholders. Because it's undervalued right now, even though it's underperforming the market, it's still, the fair value still outperforms what we'd expect from SPY. So in 3 years, you'd be sitting on about 33% growth from the current price to the fair value at that point, and in 5 years, 49. So the 5 year is only outperforming SPY by 2%, and the 3 year is outperforming by 7%. We already went over all the price charts, so for this one, I mean, we can come up with a worst case scenario and see if it's completely negative. Analysts are projecting 3.4% declines in the 2 year. The lowest share buyback we've seen is 5.33. Let's say that the cash flow growth outperforms the revenue, or cash flow decline outperforms the revenue decline. So let's just say 4% there. Assets, 2%, liabilities, 3, dividend, 0, margin, no growth. You're still not negative. Your average return is 2.4%, mostly due to the share buybacks. I mean, if we take that to 0, then you're probably, yes, you're looking at about 2% declines from there. So if they stop with share repurchases, I'd expect this thing to decline quite a bit. But if they keep it up, they're bringing value back to the shareholder, and if they can grow the top line, they can probably outperform the market at some point. So it definitely goes on a watch list for me. Super sound fundamentally. I need to look into why they declined from 95 to 87 and why analysts are projecting revenue declines. But this is a super sound, fundamentally mid-cap, boring company. Definitely what I like to see that is on the that's in need of a turnaround. This is just a basic look at the fundamentals and the fair value of the company. Do your own research and see if it works for your portfolio. I want to thank you guys for watching. Please like and enjoy the video. Comment what other stocks we should take a look at, and subscribe so you can stay up to date with everything. And I'll catch you next time.